Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, February 26, 2020. I wanted to just do a quick overview. Again, pretty much everything I've already gotten out on charts, both last night and today, and that is the case for a substantial rally here, a tradable rally. So let's start out with the charts. This is a QQQ 60-minute chart. Again, more of a review of what I posted this morning. What I'm going to do is turn on the pre-market and after-hour trades right here, and you can see again that was the what I referred to as last night on the futures as energy building like a coiled spring. The post last night. Remember, I didn't post QQQ because the after-hours trading was over. You can see what's going on in the futures a little better. Well, you can see what's going on in the futures period because they're trading, at 11 o'clock at night or whenever it is. So that's it. We came down. The future spiked down earlier this morning, hit one of the targets. I'll get to NQ in a second, and I'll try to give you guys some SPY targets, IWM as well. I know, yes, I'm hyper focused on the Qs, and there's also a time sensitive, issue to getting these things out there. When I see these charts this morning, it takes a long time to update the chart, tweak any horizontal, or price support resistance levels, trend lines, identify anything I might have missed. Then screenshot the chart, put the notes together, get it out there. And of course, I mentioned, if you saw this morning's post, typos are common especially with time-sensitive ideas. I fire off the post. If I get the chance later after I publish it, I'll proofread it. So if you see a level, member Daisy had pointed out, or Daisy, that there was a typo in the post this morning. Here, I'll show you that, and I fixed that. So I just wanted to say. That was last night. Where's today's post? Yeah, this one here. Stock market poised for 3% rally. And I had listed this as 271.50. So obviously that's you can see the levels on the chart. So when in doubt, go what's on the charts, and also question me, and that's what's the comment sections for. There it is. Daisy had said, yep. 270, 217.50-ish. Yes, correct level. And somebody's asking for SPY, and that's what I'll do for you now. Let's get to the chart. So just want to say, we hit it. First target right now. Trade as you want. My thoughts were we were very oversold. We had the divergence, as I showed you on the 30-minute chart, positive divergence. I really love to see to position long for the next trend up. I like to see positive divergence on the 60. Now, look, we had it here. I'm going to draw it out for you. Technically speaking, there is divergence, not as clear here. And as I laid out this morning, look, you got to be aware of all possibilities. We saw some very impulsive selling recently. Sometimes when that happens, things break. It certainly is a check to the bulls, those that were overly bullish, too much bullish sentiment, and all of a sudden they're like, it's that WTF moment where they realized, in just 4 days, the Qs fell 10%. That'll put a check on anybody's bullishness right there. So, at some point this rally will end. Now, I'm not saying we can't go to new highs, and let me just not even right now. Let's not even focus on that. I'm only focused on the near term. So, here it is. If you're an active trader and you want to take the quick buck, you could take profits here. Qs are up 2% at resistance. That's 220.25 plus this trend line. I'm favoring a push up there. I favor more upside today. I think there's going to be a lot of bargain hunters. Those that may have been very bullish but haven't had a chance to buy Apple or Facebook or Amazon or Apple or Alphabet, whatever, because the stocks just haven't let them in. They've gone up and up and up, and now you can buy Apple and all these other names or the Qs on sale. You're buying them 10% off where they were just recently. So the old joke as a stockbroker, and we wouldn't say this to clients, but amongst each other, if you liked it at 100, you got to love it at 80, right? On a stock, with the whole intent, don't be sore, buy more, that kind of thing. So if you liked Apple up there around 330 and you were thinking about buying it after they popped earnings, well, the stocks dropped 14%. So you're going to see bargain hunters step in. Is this the end of the correction? Probably not. Possible, but probably not. So let's just focus right now on bounce targets. And I'll do a little more on the long-term updates maybe later. I just wanted to say there it is. First target hit. And a lot of eyes are going to be on that 224 level. There's a big old gap. Gaps are like magnets for traders. And a lot of eyes are going to be watching that level. You know, once we had the gap there, we came down and back tested and failed there. So there's certainly a level. If this 220.25 and that trend line gets taken out with conviction, that's where we go, and we'll probably have a reaction. I'll say this: there's a lot of eyes are going to be on that level, and if you're targeting that, you know, and that's where you want to pull the trigger. You don't want to hold out for 224.18. You want to step in a little early because the sellers, you sell a little early because the sellers may step in early. Now, sometimes when all eyes are on a level and you think you're going to reverse, we can pop on through there. And if we do, it's a big old gap to be backfilled. So let me just lay out a more bullish scenario. We could take that out, whether we have a reaction there first or not, and come in for a back test of this trend line. Remember, this was a key level. I've been harping on that for a long, long time. That's the trend line off the October 3rd lows. We'll draw it out here for you nice and clean with all the other trend lines. There it is. And so that trend line was taken out in one fell swoop. It was taken out with a gap, never even back tested. So here's a potential near-term bullish, longer-term bearish scenario. We come up and you back test that trend line. What would that mean for you if we do back test it and you're long? And it gets up there. I'm going to measure. Depends on when, if and when it gets there, but let's just say that it works its way up here and we come in around this point in time where the crosshairs are. That would coincide with a back test of the trend line as well as a backfill of the gap. Perfect, you know, technical setup, 229.42 or so on that top of the gap there, and that's about 4.25% above where we're at now. First things first. The way this whole thing works is you're at resistance now. You got to get through there. So I don't want to get ahead of myself, but I want to lay out these are potential price targets should we continue to rally. And so as an active trader or a regular swing trader, you have two options. You can, you know, a very active trader might want to book profits here if they think you're going to get a pullback, or you know, if you think that's the end of the run, obviously you reverse even to a short. And I give you a scenario this morning where we could take another leg down. The other option is, if you're not sure, you can trail stops up. If you got in today, last night on the futures, you know, when it looked like a breakout was likely, futures even hit support, or you took the breakout here, you can just trail stops up to protect profits and let it run. And that way, if, you know, takes another leg down, you at least, again, you protected some of your profits and you get back, you know, or locked in some of your profits, I should say. All right, so those are the potential bullish scenarios. And remember, we are in a primary uptrend. Despite the impulsive selling, don't let recency bias cloud your judgment. You know, it looked like the market and world was coming to an end 2 days ago with that relentless selling, and here we are now rallying hard. That was just a crowded rush for the exits. It could be the start of something more. I'm very, very open to that, but I'm also open to the fact it was just a one and done overdue correction, and we go up to new highs. So again, I'm taking it day by day, support and resistance level by support and resistance level, if that makes sense. I'll let the market kind of be my guide here. So now, what would be the bearish scenario? Remember, we had some pretty powerful sell signals, impulsive selling the other day. Well, as I said in the post this morning, we could reverse here, say boom, down, almost a little flagging type action on a bigger scale there, and then come on down here, maybe down only to this 211.42 level. And in doing so, we could put in a bigger divergent low, setting the stage for a more powerful lasting rally there. So I'm leaning towards this right now, at least up to 224.18. I'll tell you that. But trading is all about being flexible and not being married to any one view of the market must do this or must do that. So there's your levels to watch, and the way it works. If you see an impulsive rejection here, then you want to see this 217-ish, 34 level, that support level that we broke out of today. Remember, former resistance becomes support. Then you can see the levels there. You take those out, and that would be even more bearish if we take out those support levels. Let me turn these lines off, and I'm going to give you SPY levels. Or no, we'll leave these on real quick, the after-hour trades and all that. Let me go to SPY. I haven't even updated the chart, so we'll do that right now. Okay, here's SPY showing the after-hour trades. I'm going to turn those off now. I just wanted to see how they look there. Let's let's go here. And what is this? I'm going to take that trend line. Oh, those were bear flag measurements before. And so far, this bear flag is reverse shy of the measured target. So I'm going to yeah, let's just go ahead and take these off now. Let's just do that. They're not really very relevant anymore. Why? Because even if we go down there, you don't see this in a bear flag. It's usually an impulsive move leading down into the flag formation and then an equally impulsive move leading out of it. And so far, this kickback rally has been a little bit too much to really say it's still going. So in other words, it played out, just fell a little shy of the measured target. Doesn't mean that it didn't, again, doesn't mean the bear flag didn't play out. The measured target is just a rough estimate of where prices are likely to go. And as I always say, I take a measured target, I look at that, but I put a much higher weighting on support and resistance levels. This was a key level back here. We had a little, look at that, little bear flag back there. I pointed out at the time that one played out. And we had a lot of reactions and gaps off that level. So 312.17 was a very valid support level and a potential target I believe I would have laid out before. And that's where we reversed. So that's it. And this would have been, if things got a little ugly and that level went, that would have likely been our next, and still could be the next stopping point. Again, we're not out of the woods yet, but I'm going to add one more level for you here. See, there's a gap here. It's not as significant, but it's worth mentioning. You have more reactions on this yellow level here, about 320.50, but there is a gap right there. So we are at gap resistance right now. I just showed you a second ago we're at resistance on the Qs, and we're at resistance on SPY as well. So as I do this video, this is the first really target or was the first target on QQQ that I laid out this morning, and or resistance level that we need to take out. So we're either going to fail here and head back down, and if we do, then you want to watch again. Maybe we just come in, successfully test this low. Maybe we even pull back. If we have a rejection here, it doesn't mean we have to go all the way down there. I want to say that there's nothing wrong. In fact, it'd be perfectly normal to see a little consolidation here and then punch on through there up to the next resistance. If we pop on through 317.80, we'll call it 318 if you want to round off, then 320.50 comes into play, and that's a fairly significant resistance level in itself, and more of a resistance zone up to about 322. Here's the top or the bottom of your gap. There's the top of the gap. So I should add, these were little micro levels, but let me give you another line here. I'm just going to leave those on for now. Very big level right here. Let's give it a different color just so it stands out, something bright. Why? Well, I see not one. First of all, the massive gap. The bigger a gap, the more significant it is. More eyes are going to see it. It's impossible to miss that gap. There's going to be something going on around there and when we get there. And there's also another gap right there and another gap there. So I'm going to name this Gap City right here. This line is Gap City. 1, 2, 3 recent gaps, and those are decent sized gaps in themselves. So let's just say that is a very objective and ideal swing target if you think there's more upside in this rally. And like I said, I think there will likely be. We're going to have to get through here. We're having a little bit of a reaction so far there, kind of paused. The rally is kind of stalled out a little bit. But let me measure it out for you, and that would be about a almost 2.5% rally from where we're at now, another 2.5% upside. If we happen to pop on through there, there is resistance above it, but you have a big old gap, and quite often, not always, this gap is going to be too obvious. I'm a little hesitation. I think you can pick up my voice about this gap, what's going to happen when we get there, or if we get into the gap, because it's almost too obvious, and the market doesn't do easy. If all traders are looking at the same thing and thinking the same thing, and we're all okay, once we enter this gap, go long, we're going to backfill it. Probably not going to be that easy. Probably be a fake out move, pop into the gap, and then reverse, or even come in, reverse just shy. So I'm sorry, I'm kind of waffling a little bit around what will happen there. Like I said, it's an ideal target, and if you're targeting that level, again, best to just take profits just a little bit shy of it. You don't have to go, way below it, but there'll probably be some sellers stepping in as we approach that level, if we even get there. I can't impress that enough. I'm talking about the upside targets. I'm telling you where I think we're going now. But this was some pretty impulsive and mean selling. Some things might have broke recently. What I mean by that, there's hedge funds that sometimes blow up on these big moves. They're over leveraged, and a big move can sort of break things in the market, and you just have to be careful after a big move like this. This may prove, and so far we really can't say it's anything more than just a oversold snapback counter trend rally. So we'll leave it there. I told you what'll happen if we reverse here. You want to watch for a break of today's lows. That would open the door for another move down. And if we did it, if we get back down to and break today's lows, I can tell you it'll probably be a very swift move down. It'll a lot of longs that are probably late coming in late chasing this rally now, buying here right at resistance. They're going to get smoked and their stops will be cleared out. And you'll also see a lot of capitulation. The sentiment will change from it's bullish right now because we're up 2% or 1.5 on SPY, 2 on QQQ. But if we were to jog down here and take out yesterday's lows, yeah, I think you'd see a pretty fast and swift drop. I'll bet there's a lot of stops on longs set just below that level. Okay, and if that happens, again, that's why we do this. We want to lay out scenarios in advance, kind of have our game plan there. If that happens, we really haven't even, MACD is, PPO has hardly moved up here. I was trying to see if we get a potential divergent low here on the 60-minute chart of SPY. Remember, we do not have positive divergence on SPY. We have just deeply oversold and a low-level bullish PPO crossover. And again, that's why I am leaning towards this being a counter trend rally, whether it ends here or up to maybe as high as that level, quite likely followed by another thrust down, and it could exceed that level. So I'm trading this, long as I speak, and by the time I wrap this video up, who knows, maybe I'll be short again if there's something I see in here and see in the futures that I don't like. I'm going to look at the FANGs again. I looked at them today. I'll show you that real quick. I wanted to show you Apple. And go to this board there. There's Apple at a long-term trend line. This trend line comes all the way back here off the May 31st lows. And this is another reason that I'm, favoring a bounce from this point. Apple, I just showed you, fell 14%, biggest drop in many, many months, all year, and actually exceeded any drop I think we had last year other than this one right here. And, but it fell to trendline support. So at the very least, buyers are going to step in, bargain hunters that like Apple, and but it has it. And now the thing is, it has a lot of overhead resistance. So that's kind of my mindset. As I've been saying, I'm looking for a bounce, tradable bounce. Get out at some point, for the time being, trailing stops up, sitting tight on the longs, and then I very well may be short again. And whether I hold those shorts or just look for another pullback or wait for a break in a much longer, more powerful sell signal. Because if Apple takes this out, and then you have the other FANG stocks as well, let's just run through those real quick because all of this goes into my analysis. You have Microsoft. Punch down below this trend line here. I'm going to tweak it a little bit because we have a couple reactions, so I can now modify this trend line if I can grab it. I need to move that line out of the way, and let's come in under that candle and let's tighten it up right here. So we have 1, 2, 3 and now 4 reactions, several candles there, but they're in a cluster together, so I count that as 4 distinct reactions. You can count each one if you want. So either way, I just showed you Apple, the world's largest company, and Microsoft, the world's second largest, or publicly traded company in the U.S., that is, not talking about Saudi or Aramco. There's 2 of the leading components at support. So we're at a critical technical juncture. Now, normally you might say, and you can do it, you can buy support, but they had almost divergence. Actually, Microsoft never made a new high. So technically you didn't have negative divergence, but you did on a lot of other stocks, I think including Apple. Yeah, we did. We had a divergent high. Excuse me, feeling a little raspy today. All right, Apple, Microsoft. We could go through the rest, but it doesn't matter. Let's wrap this video up by looking at the futures real quick. All right, so here's QQQ. Although we did not have the divergence on the SPY 60-minute, only a little bit on the QQQ, we do have positive divergence here on the NQ 60-minute chart, and that is something worth noting. These are the times I'm on the lookout for a trend reversal. That's my trading strategy, or big part of it, not all of it, but it's simple stuff. Look for the divergent highs right here, and then usually followed by await a sell signal, which comes, in this case, came on a break of that trend line, and then look for the divergent lows. We had one on ES futures recently. We don't have any here, but this is the first divergent low we have on NQ in a long time, positive divergence, and that could set the stage for a much larger rally potentially. You can see all these were support levels on the way down, broken. Now they become resistance levels, so that's it. I showed you we were at resistance on SPY, we were at resistance on NQ, and so basically that's it. We need to punch through today's highs, and that should open the door for a move up to this next target zone right there on NQ. We'll look at ES real quick. If I can find it down here, there it is. Same story. Here's your divergence. Actually, put it in there. We didn't have it last night when I did that update. We had it on the RSI. We had RSI divergence. Now we have both RSI and PPO divergence. Let's see, that line got moved. There it is. There's your PPO divergence, RSI divergence, like this, steepening. There's that cluster that I highlighted last night, that area of consolidation recently, and I mentioned it acts as like a coiled spring. You're building energy, and then pop. There's your breakout, impulsive so far. While it may fail, anything's possible. I take it on face value. There's no reason not to, especially with the divergences and the overbought conditions. So this is a buy signal. You can see, well, there's levels. I might have to tweak this chart a little bit. Let me give you one more chart, and then we'll wrap it up. IWM for your small cap traders. Haven't even looked at it recently. I've just been kind of hyper-focused on NQ. Okay, this is the IWM, my daily chart. This is a bit busy, meaning a lot of trend lines. I can turn them off there, and I'll show you what stands out to me. Well, let me put it back on real quick and just scroll over and show you what stands out. We did put in a divergent high on IWM recently. There's your divergent high, negative divergence right here, steepened to that point, and boom, we've been correcting. This line here, that 150, that's about 160. It was a very significant level. It was, IWM had been in a consolidation sideways range for almost a year and broke out above it. It made a successful backtest here. We broke out backtest. Guess what? It failed the other day. That is bad. That is bad technically. That is a false breakout, failed breakout. That 160 now becomes resistance. So this kind of meshes with my bounce. You can get in, trade it. I mean, there's more meat left on the bone if it wants to make a full back test to that 160 level, about another 1.3% or so. But then another leg down unless it can regain it. So that kind of aligns with my overall primary scenario that I'm working on now, which is this is a oversold rally within a larger correction with more downside to come soon, and just trying to identify how far it might go. All right, IWM 60-minute chart. Let's see if I have anything there. I might need to update it. We hit and slightly overshot this 157.25 support level / target, and you can see all the little wash, rinse, repeat stuff. Divergent high, correction, divergent high, correction, divergent high, correction. What stands out to me is this is a series of increasingly larger corrections. So this is showing a little bit of a change in character in the market. A strong rally, corrections are small, get bought up quickly by the dip buyers. But what we're seeing here is the corrections are becoming not just larger in scope, but they're also more impulsive. Look at this one. It's larger than the previous one, and it's also so not only have we fallen more, excuse me, that would have been around the same slope as that descent before, but we've fallen a lot faster. So that doesn't bode well for the bullish scenario, and it does bode well for the longer term potential, the scenario that we may be at the start of a much larger correction. Got to be open to that. Got to be open to all things. Could be a one-off event, but nothing has changed in my analysis for months and months and weeks now, or oh, I should say almost years, that the longer term charts continue to diverge. IWM already put in a high back here. IWM topped back in 2018. So that one, say what you want, but unlike the large caps, it has not gone on to break out to new highs since all the way back in 2018. So let's just move on from there. Whereas SPY, QQQ have, but the technical posture has not changed. This is the big picture here. Big divergence, the same divergences, the same premises or principles that I pointed out on the 60-minute time frames where we're getting those, swing trades. The same thing works here, just on a longer, much longer scale. So you have a big bearish rising wedge pattern confirmed with negative divergence here, PPO, RSI, even the percent of stocks above their 20-month moving average. Just about all indicators are diverging, and this really sets the stage for the next bear market. However, we're above trend right now. There's a trend line right there. Depends how I want to draw that one on SPY, QQQ. We're well above trend. There's a primary bull market trend line. I went over that in yesterday's video. And that 20-month EMA, the blue line, you can see it coming in. So we're, it's much too early to say that the top of the market is in. We'll only be able to say that, definitively in hindsight. Obviously, that makes sense. There's no way to know factually whether the first 5-10% pullback is the end of the, the great bull market and the beginning of the start of something more, or just a correction. But we can say with a pretty good degree of confidence when that goes. Now it's going to be painful to ride out, get to that point. If you're long, it's probably going to take us about a 20% drop just to say, hey, we are in a bear market. And of course, 20% drop off the highs technically would be, but all right, let's wrap it up here. I gave you levels to watch. I gave you levels on the futures, SPY, QQQ. Most importantly is the resistance that we're at right now. So like I said, active traders certainly take some profits there, and then either recycle in on a pullback or recycle in on a breakout. That's the other option too. If you're an active trader and you want to game, I put very good odds. That's why on the charts I gave you this morning, and I usually do this, there's arrow breaks at my targets, and an arrow break is where a reaction is likely, whether that's a pause or a pullback. And active traders can recycle, take profits, even reverse, go short, get back in on a pullback. Or if you don't get a pullback, if you only get a consolidation, you can just wait and then buy back in if you get a breakout above the resistance level, and then that puts you back in the trade. You might have missed a little bit there, but you also may have sidestepped some get back in profits. So that's active trading stuff. Whereas regular swing traders, you just need to pick a target, go with a trading plan, what you're buying, why you're buying it, where you're going to sell it, if you're right, which is your price target, and where you're going to sell if you're wrong, which is your stop. And your stops should be in line or commensurate with your price targets, using an attractive risk-reward ratio, at least 2 to 1, or if not better, 3 to 1 is a nice risk-reward ratio that I like to use. Sometimes better, sometimes worse, depends on the trade. All right, we'll wrap it up here, and I'll do an update on USO, commodities, everything else. I'll do another video or some additional posts on the homepage today. This has been Randy Finney with Right Side of the Chart, and hope you enjoyed it.